I usually starting the session in next 1 minute. Some participants are still joining in. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I hope everyone's doing well. And before we go ahead with the session, I would like to give a small disclaimer that any security that we'll discuss in today's session should not be considered as a buy or sell recommendation, and we'll be doing it just for educational purpose. So without much ado, let's start with how Nifty 50 behaved during the day. So following XDS Nifty's close and global cues as well, Nifty had a muted opening and it was very flat. But post that, in the after in the first 10 minutes itself, Nifty came under selling pressure, as you can see, three to four big red candles. After making an intraday low of around 17,225, it made a recovery in the second half of the day and managed to close near 17,400. So Nifty is still trading above its 200 DMA, which is a good sign. And Nifty closed around 0.2% higher, which is considered as the uh, sixth sixth consecutive higher closing for Nifty. So yes, I mean, we discussed this in the morning session as well, and Nifty continues to remain in confirmed uptrend, and the distribution day count is still very low at one, which is a good sign and reaffirms our view in the in the current market rally. And Nifty is trading above the 200 DMA sign, which is a good sign. But if you look at it in the last three sessions, Nifty is consolidating kind of in a very tight range. But on the good part, or the good front, is that Nifty is not breached its 200 DMA until the point in time Nifty trades above its 200 DMA and your distribution day counts remain low. Markets will continue to remain in confirmed uptrend. So talking about the top gainers and top losers for the day, uh, particularly the top gainers came in from the IT sector, such as your TechChem, your Infi, and your TCS. And overall, the top gainers were TechChem, as it advanced around 2.2%, Infosys by around 1.7% higher, Titan around 1.42% higher, TCS 1.4% higher, Asian Paint around 1.4% higher, and Hero Motoko around 1.2% higher. Talking about the top losers, uh, Sun Pharma was the biggest loser for the day from Nifty 50, which lost around 2.2% for the day. Tata Motors lost around 1.93%, Kotak Bank around 1.8%, Maruti Suzuki around 1.7%, Coal India around 1.5%, and UPL by nearly around 1%. As we talk about the sector view, the most prominent thing what anyone can look out for today's session is your IT sessions movement. Your IT sector moved around 1.35% higher, where your major sectoral indices were trading lower. The other sectoral indices which kind of closed in the positive zone were Nifty Financial Services. On the flip side, if you look at it, auto was the major loser, as Nifty auto declined by around 0.8%, FMCG by around 0.41%, and Pharma by around 0.8%. So now let's talk about some key news. And as the result seasons are going on, let's have a key look at some results that came in during the day. So Aditya Birla's Capital Q1 FY23 revenue grew by around 23% YOY. PAT increased by around 42% YOY. It reported its highest quarterly profit. TCI's Q1 FY23 revenue grew around 30.3% YOY. PAT increased by 30.5% YOY. And EBITDA margin improved 30 basis points YOY to 14.7%. Brigade Enterprises Q1 FY23 net consolidated income surged 135% YOY to 920.3 crores. PAT came in at 64.6 crores against a loss of 85.9 crores in Q1 FY22. Talking about Triveni Q1 FY23 revenue surged by around 22.5% YOY to 1361.5 crores. PAT fell by 28% YOY to 66.4 crores. Talking about, the major result for the day, or one of the bigger results for the day was your Godrej Consumers. And Godrej Consumers PAT was a miss on estimate, and majorly it was a miss on estimate. It was just revenue which fell in line with estimates. Talking about your YOY change, revenue grew by around 8% YOY to 3125 crores. EBITDA fell by around 13.2% YOY to 521 crores. EBITDA margins contracted by 400 basis points YOY to 16.7%, and PAT declined by around 16.6%. Even the domestic branded volume fall was around 6% against consensus estimates, fall of 4.4 to 5%. Talking about the future ahead for the company, management expects recovery in consumption and gross margins. So on the technical front, if you look at it, the stock tried to break some few months back. The stock did try to break out of a consolidation base, and after successfully breaking out, has been trending lower, and even the RS line has been trending lower. So what's majorly notable in for this stock is, let me do a chart annotation so that you guys can see it. Is that before the build up, or during the build up for the results, and before this results, you can see the stock did advance, and even stock had advanced, and even your RS line was moving in the upward direction, which was considered as a good sign. But as the results, as the result day came in near, the RS line even started to decline, and even the stock was trading like in a narrow range around its 200 DMA. And with the stock result on a miss on the estimates, there can be a negative reaction on the stock going forward, maybe in tomorrow's session. So the next result, would like to discuss is Devyani International. A proxy play um, uh, on the not the FMCG sector, but on your QSR segment in India, which operates the franchisees for your KFC, your Costa Coffee, and which can be considered, and the Pizza Hut. And overall, the result was really good. The revenue doubled by YOY to 1008 crore. The base was low, but there were few notable points that would like to discuss. And the company added 17 new units during the quarter. Gross margins, despite inflationary pressures, was maintained at around 71.1%, and EBITDA margins came in around 23.3%. PAT at rupees 74.7 crore against a loss of 33.4 crores. So out of the 70 new stores that were opened, 27 was KFC, 23 stores on Pizza Hut, and 14 stores of Costa Coffee. So going forward as well, the company is with the kind of new stores opening run rate, the company is expecting to double the total number of stores to in the next 4 to 5 years. The current count of stores is at 1008, which can be considered as really good. On the economy front as well, the company is seeing early signs of recovery in consumer sentiment. So, so the sectors like your FMCG retail are likely to report marginal volume growth over the next few quarters, and even the input prices have remained elevated. But I mean, with well-established business such as your Devyani International, they hoping to scale their with the scale they have, and be able to scale the operations going forward. They're expecting it to navigate the inflationary price crisis as well. On the technical front as well, I mean, you can see the stock is trying to break out from a consolidation base. And even today's move was really positive. The stock was around nearly 6% up on really huge volumes. And even the RS line, if you look at it, has been trending higher for the last few sessions. The stock is still 7% from the pivot, but can be kept on one's radar going forward. So the chart of the day, I mean, the chart of the day for today is Uflex. And talking about Uflex, overall, on the ratings front as well, Uflex has been really good. I mean, an EPS strength, which is really great at 95. The price trend has been fair at 63 and is kind of declining as the stock is forming a handle base, which is bound to happen because in the handle formation of the stock, the stock tends to consolidate or tend to correct by around 2 to 5%. That is currently happening at the moment. If we talk about the number of funds or the share held by funds, both are increasing quarter on quarter, which can be considered as a good sign. The stock is forming a stage three cup with handle base and is currently 5% from the pivot. So talking about on the fundamental and the qualitative front, the stock is in the manufacture of BOPET and BOPP films, and overall the key, and it has a very wide client base in the FMCG and the pharma sector. Some key clientele for Uflex includes Coca-Cola, Nestle, Mondelez International, Amul, GlaxoSmithKline, PepsiCo, ITC, Britannia, P&G, etc. And it has a very diverse consumer base as well. The top customer accounts for only 10% of the revenue, and top five customers account for only 80% of the revenue. And it has a very strong global sales and distribution network, which caters to 143 countries across the globe. And it has a very nice mix between your domestic and export. Domestic accounts for around 49% of the revenue, and exports around 51% of the revenue. And even on the manufacturing front, it has nine manufacturing facilities across India, UAE, Poland, Russia, Egypt, Mexico, and UAE. It has a production capacity of 381,000 tons per annum, which is considered a really good sign. The stock is expected to come out with the results in the next week. So let's see how I mean, the numbers come in, and whether the stock is able to provide some price momentum going forward and is able to break out from this cup with handle base on an above average volume or not. So thank you guys, and do stay tuned with the after hours session as well and the pre-bell session, and do connect with us tomorrow for the stock darbar with the MarketSmith India team, where we'll try to handle and try to answer as many stock and sector queries of yours as possible. Thank you once again.